What's up? What's up, guys? Let me know if you can hear me.
Good now.
Yeah, I can
Okay.
hear you.
All right, perfect. I have like a new setup, so I'm trying to see. So now start this recording. All right, good morning, guys. Today is Tuesday, August 8th. As usual, doing analysis for US 30, gold, and EU. So right since we came up with the SAR strategy, that's all I've been focusing on. I'm not even combining it with any of our other strategies. So just to break it down, and right now I'm not in any trade. I was in this gold sell on the SAR. And let me put that SAR strategy right here on the screen. But I got stopped out of break even. But so let me put this right here on the screen. We might need to put it on another screen. So let me try and put it on here on a bigger screen. So if any of you guys who are on the live session don't know anything about the SAR strategy, let me know. But I see Patrick. I'm not sure if you've joined us in our live session before. I think he dropped off. But I think, right, Audrey and Levi, you guys know about it. So here, right, so suitable for scalping and entries at lower time frames. So the first thing is to always have a bias in the higher time frames. So for example, this gold sell that I entered this morning and I got stopped at a break even. So my bias, remember, my bias normally comes from trend lines. That's number one, trend lines on the hourly time frame. So before that entry right there, gold had broken below this static trend line and started trending to the downside, had also rejected from this trend line. So we were in this downtrend on gold. So my bias for gold was a sell. Now, since it was a sell and US 30 is dropping as well, since it was a sell, the other thing I noticed using this SAR strategy is go also like on the 4-hour time frame or 1 hour, right? One thing you're looking for is this double lines, right? So double, I call them double SAR. So anywhere where you have, and keep in mind, right, the green zones are like buy zones, the red zones are also sell zones. So for example here, and SAR means stop and reverse, actually not even support and resistance. So keep that in mind. So when I say parabolic SAR, right, when I say SAR, think of stop and reverse. So that's also why I'd mentioned that parabolic zones can be used as reversal zones. So what I was looking at here for gold, you see this red candle? This red candle came all the way here and then close below what? Close. So for sells, you're looking for closure and retest of either a parabolic SAR zone, just one, or if you have more than one zone, the better, because the better the buy will be, the better the sell will be. So here for gold, and I know Desire entered as well. I don't know, Desire, if you got stopped out at the break even. I see you just joined. So here, what I saw right here, if I replay, so let me go ahead and replay this and we can watch it in real time. So this is what we are watching, this double zones right here. So when we see that, look at that red candle. It closed below, right? So what are the strategies? It is to wait for break, retest, and closure. So here, since I was looking for a sell, I needed this next candle to retest and close below this double SAR. So when that happened, and you see that's what happened in that next candle, and let me take off this, right? I entered my sell there. And this is, again, this, for if you're using the hourly and the 4-hour, it's better for swing trading. So for me here, my stop loss, let me just adjust this so that I'm able to drag. So stop loss should be at least 30 pips or above the SAR region you entered in. So for this one, your stop loss could have been this, and you see this one gives you like a 30 pip stop loss, or above the high of the previous candle. So if you're going above the high, you could have gotten like a 40 pip, 47 pip stop loss if you're going above the SAR. So right, if you go here, requirements for stop loss, below or above the parabolic line, depending on direction. A better stop loss may be above or below the previous high low, right? So for this one, I entered that trade. And for me with these trades, I'm looking to, I think I did a 40. So I did a 40 pip stop loss and 80 pip TP. So this gave me a 1:1, 1:2 risk to reward. And I was risking 1%. So I was looking to make 2% from, no, I was risking 0.5%. And I was looking to make, of course, 1% for this trade if it did hit. So when the trade went into a 1:1, I said this at break even. And unfortunately, you can see I just got faked out or stopped out at break even, and the trade, still came back down. Desire, I don't know if you got stopped out, but that's the idea we are looking for here. So, I mentioned to you guys, if you're still learning this strategy, do not try to mix it with the breakout strategy. I haven't been trading the breakout. I haven't been trading the crosses. I haven't been trading anything else. So as I'm understanding this strategy, you can see here I have two indicators, right? So I've started bringing in the zones, because if I'm buying, of course, I want to see buyers. If I'm selling, I want to see sellers. But right, I'm still, even in this session, I'm not going to turn on the zones, because I want to also show you guys the 4-hour time frame. So let's go on the 4-hour time frame and see what we find on all these three instruments. So number one, US 30. We have a 4-hour time frame here. I'm sorry, this is the hourly. This is a double what do we call it, double SAR for sell. So what we would be looking for here is an hourly closure below this, and then the next hourly closure to retest and close below this, and at that point you can enter another sell for US 30. If we go on the 4-hour time frame, and again, this is what I would do like before the live session, so I don't want to be doing this also before the live session, or during the live session, in order to save time. So on the 4-hour time frame, you can see we just have like single SAR zones to the bottom, but you can see we have a double SAR at 35,343. So how do you interpret this? You can set up an alert at 35,349, so such that if price comes back up here and gives you that closure, two closures above on the 4-hour time frame, you can enter a buy on US 30, right? So for me, right, I look at these zones as future zones that I need to come back to the charts or set an alert. Let me see something. All right, my bad. Okay. So you can see how I interpret especially the 4-hour zones, right? Especially you can see how that 4-hour zone on US 30 is so high up, right? So this one, I would rather just set like a alert so that I observe even when price does come this, because this is a double SAR for a buy. But right now on the hourly, and my bias, right? What is my bias right now for US 30? You can see US 30 has been breaking, and it's attempting to break this static trend line to the downside. Also on the daily time frame, I have been biased for sells. Where's my outlook for US 30? I have been biased for sales, right? Since we got this sell entry right here, my bias for the month of August through September is a sell for US 30 overall, right? So for me, I would rather catch this sell right here. But for me to catch this sell, it would have to be this hourly closure and then the next hourly closure. Now for gold, what do we have? On the hourly closure, on the hourly time frame, we don't have any double SARs, right? We only have this zone right here, which is like I think, no, this is a green zone. Yeah, so this is a buy zone right here. But looking at bias, what's my bias on gold? Bias on gold, I expect gold to come to around 1917, 1918 area. And you can see we're in no man's land right now. We just came from this static to the trend line from the upside. So my bias right now for gold is a sell. So if that's the case, I'm just going to see, okay, what entries do I have right here? Here we have a a single SAR for a buy. So that doesn't fit my bias. On the 4-hour, what do we have right there? Or in areas around it? On the 4-hour, you can see around 1919, 1920, we have a double SAR on gold. And this might happen during Asia session. So what might happen during gold, because I've seen this happen before, these heavy drops happen before, gold can range in between this zone. And then during Asia, it starts trending here. and then you get two candles breaking and retesting, and gold can drop further down during Asia session. So 1919, 1920 on the 4-hour time frame is a major level to look out for gold. But right now on the hourly time frame, there's nothing to look out for other than this entry that I got stopped out at. I'm not sure. I don't think I want to re-enter, but we'll see as time goes on. But for me, you can see how this sell candles and this rejection off of this sell SARs, they are literally holding price back down to the downside. So if I get, as the live session continues, if I get an entry on gold for a sell, I will look to enter, and possibly I'll do it on the 15 minute time frame. So that's on gold. EU, what do we have? On the hourly time frame, we just have the basic, right? So we just have the one SAR buy region. Technically, this is a buy if you're biased for a buy for EU. So looking at my bias, personally, my bias for EU is same as gold. We are coming off of this downtrending trend line right here, and price is in no man's land. So for me, for EU, if I'm to project EU, is somewhere around here. So if my projection is for a sell on EU, I'm not gonna look for any buys. But for anybody with a buy bias on EU, you can see this was, what do we call this? We call this a retest and rejection. So this is not a break and retest. So remember this regions right here, or this pattern right here. So you have two hourly candles. The first hourly candle rejects from SAR buy zone on the hourly time frame. And then the next hourly candle, what does it do? It rejects from it as well. So retests and rejects and closes above. So in this instance, right, if somebody was looking for a buy here, they would have entered that stop below the previous low, because that's the best entry. And you can see this gives you like a 10 pip stop on EU. But for me, I am not, if my buy, if I would have only taken this trade if, for example, we were bouncing off of a trend line on EU. But right now, there's no trend line. So for example, let me give you like, so let's say we had like this entry right here was coming like in an entry like this. Actually, not even there. Let me find a nice price action from a trend line. I think we had something. So no, that was informed. We just have so many trend lines. But what I'm trying to show is if we had a static trend line already on EU, so let me just make something up. So let's say we had this. So if we had this, I would have taken this buy on EU, but currently you can see we are in no man's land. So that's the basic why I'm telling you I wouldn't take this trade as well. So on that's the hourly on EU. What do we see on the 4-hour? And you can do this all the way to the daily, but for me, the 4-hour is the max. So EU on the 4-hour, we just have nothing on the 4-hour. So we just have single SAR regions. Other than, right, you can see around 1.09 thousand. There's a double SAR around that region. So if EU does come to 1.09 thousand area, that's a nice area to put an alert and possibly prepare to take a buy around that region. But for right now, there's nothing showing up on EU on my end. So does anybody have any question regarding any of the analysis I've gone over? So other than the last time we spoke during last week's session, the only thing I've introduced is a double SAR and how to interpret it. But other than that, everything else remains the same. So any question? Mhm.
Yeah. Question. I told you that I was looking on a buy on EU, and what I've noticed is that the double SR, it's more valid on high time frame. Is that correct?
Correct. Yes. Well, based off
Yeah.
of the back testing I've done, yes. I
Okay.
think it's also valid on lower time frames, but I've just because I really don't want to go back to scalping. But yeah, go ahead.
Okay. Because I was looking like a buy on EU on 15-minute time frame.
Okay, so
But
if we go to the 15-minute.
there was like a triple, or I don't know how many, a lot of SRR on buy side. and I
Yeah,
was just, yeah, I was just waiting for a close above one
this
of
zone
these.
right here.
Yeah, 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 yeah.
Yeah. So
Um,
the other thing, right? Always be cautious of trades before the live. I'm sorry, before New York Open, because this can be a valid zone, right? I think you're talking about this area, 1.09454, right?
yeah, yeah, yeah.
So yes, it can be a valid, but you can see the entry came during market open. So that's one red flag right there. And you can see now the other part of trading lower time frames, right? You have three of them right here for buys, three of them right here for sales. So it's sort of confusing. Now, for people who love to zone trading, this is nice, right? Because you can be doing the opposite here or something. But yeah, this is why I don't uh, on the 15 minute, if I was trading on the 15 minute here, I wouldn't even extend this because I know I've taken trades. So for the 15 minute, for those double SAR or whatnot, I will look for them on hourly and 4 hour, and then just look for an entry on the 15 minute time frame. So let's assume right now this buy, and you can see EU is sort of retracing, but let's say I was looking for a buy on EU. How I would trade on the 15 minute, right? Because again, and this is why I have separate chart that extends all of these lines, because I don't want to extend them on even the chart that I'm trading. So for me, if I was looking for a buy on EU, there's this buy right here at around 1.09552. So I would just wait. If I need, right, if I had a high probability EU was gonna buy, I would just wait for a 15-minute closure above, retest and closure above, and I would buy EU from there. So that's how I would trade it. Personally, I just don't like the extended lines, especially because I have other indicators. But if for you, you just have one, this is your only indicator you're using, yes, feel free to extend the lines. But you can see how it gave us like a lot of doubles and triples, like in lower time frames. Um, any other questions? So let's see what we have right here. So based off of everything we've covered, and based off of the bias we have, so we can see where US 30 is coming to. US 30 is coming to about 35,060 area. So in 35,060 area, so currently we don't have, so for me, I'm biased for a sell for US 30, but for us to catch any sell, this hourly candle looks like it's going to close below this double SAR. We need the next hourly candle to retest. And my guess is that the next hourly candle on US 30 will do like what you see what gold did here on this hourly candle. It retested all 1, 2, and 3. So US 30 might retrace up, and you can see we are rejecting off of a trend line, or we are closely almost off of a trend line. So US 30 can come this way and open, retest this. This next hourly candle will go and break this, break this, break this. But guess what? It can close below this. If it does play out this way, I will enter a sell into US 30 and continue the move down below. But you can see we have to wait like for 2 hours, or for another hour before that happens. Yeah, so like yesterday, before, I know we didn't have a live session. Yesterday there was back-to-back trades for US 30 gold and everything, but right now I really don't see much. So US 30, we also have this hourly, but again, right, I don't want to mix all these strategies up just yet. But you can see we do have that hourly. But for me, I'm still um bearish on US 30. Here's the other thing, right? You see that analysis I just did of what the next hourly candle can do. If US 30 here literally broke this static trend line, what do we expect if the downtrend is to continue? We would expect, if this closes as a break, we would expect the next candle to retest, and if the downtrend is valid, to retest and close below, and then US 30 would continue, right? So you can see even on the using the trend lines, um, this scenario I've just played out right here is very possible to come through. So yeah, so now it's just a matter of a matter of waiting. So EU, honestly, I think EU, the best place to wait for it is 1.09 thousand, where we've observed on the 4-hour time frame. And just swing it from there. Now EU as well, right? I do see some doubles right here. So right, yesterday I did make, if you go to the results, this is the EU trade I held. So I'd sent this EU trade a while back, and it was based off of this. It was also a double right here because you had this, right? So this is the EU trade and I held it for like 2 days. So this is the EU trade I had, break and closure retest. And then for me here, I had, what did I have? I had like a 40 pip stop. And then I had a, no, 30 pip stop, 30 pip stop and 600 TP. So this is the trade I held. So it came back, I hadn't set break even. For FX pairs, sometimes I'm not going to set break even because they're not as volatile as gold and US 30. So for this one, I chose not to set break even. One reason for that is that I was expecting to see what's going to happen at this double rejection points, right? So you can see every time the hourly came back to the double, it rejected off of it immediately. So one time, two times. So when I first saw this, I kept holding because I was expecting that continuation to the downside. So for me, for this particular trade, I did not set break even. And for FX pairs, I may not be setting break even, especially given how you have a very, very tight stop loss and they move slower than gold and EU. And I think for FX pairs, based off of this, it's very, especially with the tight stop losses and especially stop losses being above or below these critical regions, it's not as common to get faked out as compared to gold and EU. So maybe for gold and EU, maybe I just need a wider TP, I'm sorry, a wider stop loss. But you can see, like, for example, here, gold, all gold has been doing is faking me out, or it took me out at break even. And you can see the selling pressure on gold is still heavy. And you can see there goes US 30 still dropping to the downside. So here oh, I was analyzing this EU. So you see this double right here. So we had this break. The next candle went back up. So it did retest, but it closed above the zone. So the sell was invalid. So here, if you're selling the hourly, you'd have had to wait for another break and then another either retest and closure below or just closure below. So technically here, the EU sell was right here, right? But for me, of course, this is not a trade I would have taken because I want my stop loss to be, right? So at least 30 pips. So if I had this at least 30 pips, you can see it's not as right. The move has already gone. So from the SAR region, I want like to enter if the SAR is right here. So same thing as gold. So the SAR for me here was not far. The double SARs that I was trading were not that far off. But here for EU, you can see that double SARs are from where the entry was. The double SARs are like what, 30, about 30 pips away. So, or 25 pips away. So if my TP is like 60 pips or 50 pips on EU, I really don't want to be entering a trade that's already like 30 pips in the direction that I wanted to trade in. But, right, if you're trading that strategy, this would
Want
have been
to
the,
ask you
I'm sorry?
on the EU right there, if you did catch that close, is it okay to take it before the retest? Because I thought you would have to wait for the retest of that
What, this
parabolic
one?
line. Yeah.
Not every time will you always get a break and retest. So in this instance for gold, it gave us the break, it gave us the retest and closure below. Some moves, especially if the trend is heavy, you'll get a break and then you'll get a continuation. So not every time. So same thing as a trend line, right? Not every time will you get that exact retest. So that's why sometimes you just have to do, are you willing to, so for example, right here for US 30. So if US 30 does something of this sort, so this candle, this hourly candle closes in the next half a minute or so. So if US 30, if this candle closes here and the next hourly candle just comes here and then continues below and closes here, this would be a valid sell on US 30. However, you know, based off of where your stop loss should be, are you willing to hold a stop loss above here? So this is a 985, this is a 100 pip stop. So for you to have a 1:2 for this trade, actually, is it that? No, this is a 300 pip stop. So for you to trade this, you would need a 300 pip stop and 300 pip, I'm sorry, and 600 pip TP. So are you willing to trade this move? So personally, no, I am not willing to do that. Right. So it would be a valid trade, but for me, right, the perfect ones, the best thing with the retests, you don't have to you don't have to worry about the price reversing up or down, right? The worst thing with the continuations, that price needs to retest a region, right? So here US 30 can, and that's why like, for example, when I talk about all my strategies, the best entry is waiting for a retest of the 9 EMA. But you guys have heard me time and time again saying that I do not wait for a retest of the 9 EMA because I don't have the time. So I just enter on impulse. But normally if you wait for the retest of the 9 EMA, because price normally, whether it's a buy or sell, price in some cases, or in a good amount of cases, reverses back to retest a critical region, whether it's a SAR region, whether it's a trend line, whether it's EMA, before continuing if price is to go in that direction. So the question is, are you willing, right? If this hourly candle, so we already got confirmation number one. So we got that break on the hourly. So this hourly candle, so the question is, if this hourly candle does not come back all the way and retest 35,244 to 35,200 and just continues down and closes below here, would you be willing to take that sell for maybe a 300? I think we saw it. Was it a 300? Let's see. Let me make sure. Because the stop loss would be here. So stop loss either there, that's 217. Yeah, that's like a 200 pip zone. So are you willing? So if for example, it closes here, are you willing to hold drawdown like to that zone? And you can see it can easily come and wick you out and then continue back to the downside. Of course, if you don't want to be wicked out, or if you want a safer stop loss, that's when you would have to have like a 280 pip stop loss. So are you willing to have a 280 pip stop loss on US 30? If that's the case, I would say yes. But for me, if this candle does not go all the way here, same thing as EU here. If this, as much as the trade would have been in profit, it's not a gamble I would have been willing to take. So for me, I'm willing to take, and that's why, let me show you like this one, the one I just showed you for EU right here, this sell. This is what I'm looking to trade, because I know if price goes heavily in my direction, my risk to reward will be so good. So for example, this trade right here, I had you can see here, you could have gotten a 0.7 0.7 pip, or what is it, a 7 pip stop on EU. But for me, right, I say have at least a 30 pip stop loss, whether it's US 30, gold, or FX pair. So if I have a 30 pip here and I do a 60 pip TP in order to have a 1:2, or even if I wanted to do like 150 pip TP and I'm sorry, 150 pip stop loss, you can see, for example, here, if I did 150, not 150, 15 pip stop loss on EU, and then let's say I want to go for 60 pips, that is a 1:4 risk to reward. So this is the trade I'm willing to do, because the closer the price is to my SAR region, the better the risk to reward I'll get. The further away from the SAR region, in this case, for example, if US 30 closes here on the hourly, the distance between here and the SAR region I'm trading is like 150 pips. And normally for me to have that 1:2, right, it would mess with my risk to reward. So that's why, as much as it would be a valid trade, that's not a trade personally I would take. So hopefully that makes sense. So ideally look for something that's going to give you a comfortable 1:2 risk to reward. So if your entry is messy, right? If your entry is not able to give you a nice and comfortable 1:2, just don't take it, or take it and know the possibilities or what can happen from that. Yeah, so for me, what I want right here, what I would love to happen is for US 30 to pump up retest all these regions and close below here. So I would want US 30 to close somewhere here on the hourly. I would want US 30 to close somewhere here because this can easily give me a 60 or 70 pip stop loss. So ideally what 75 pip stop loss, meaning I can have a comfortable 1:2 right there. So this is what I want. This is what I would prefer compared to this. So that's the difference between, so the retest is always the best. The continuation, again, right? You might be just chasing price. So that's what I want for US 30. But again, this hourly candle has to close. And keep in mind, right, US 30. So here, oh, we got that nice. So wait, give me 1 second. We got that rejection from this side. The next buy is all the way at 30. We can you can catch a buy to the upside, but for me the next, so keep in mind I'm not trading any other strategy. I know we have an hourly order block right here, but nowadays I just want to trade this parabolic by itself until I can master it without even thinking twice. So if I do expect US 30 to retest this, and I know we are also coming off of bullish order block, what I would be looking for me to enter using a parabolic zone, I would have to wait for a break and retest of this break, retest, and closure above this parabolic buy zone on the 15-minute time frame. This one right here, around 35,240, but 35,240 right here might be a little bit too late. So, and this is on the 15-minute time frame. So let's see if there's something on the 5-minute time frame right here. So there's no, right, we don't even have a parabolic buy zone on the 5-minute time frame. So, and that's another thing I love about parabolics. They'll keep you away from FOMOing. So you see like how right, based off of this rejection on the hourly trend line, and I'm expecting US 30 to come back and retest that zone before continuation to the downside, and I'm looking for an entry on the 15-minute time frame. I didn't get a parabolic zone. Keep in mind, right, for me, I don't extend the lines. These are just the markups. I don't extend the lines on the 15-minute time frames and below. So for me, I trade the parabolic zone that's right there and then. So the parabolic zone that I can see. So I'm not interested in extending any lines on the 15-minute, on the 5. So this tells me that, hey, if you want to buy US 30 for that continuation backup, your best bet is to wait for break and retest and closure above 240 on the 15-minute time frame. But I already know that that's not going to work for me because 240 will be a little too late. That's when US 30, if price does get up there, that's when US 30 can start reversing back to the downside. Okay, I tell myself, what about the 5-minute? 5-minute as well, I don't have a green parabolic zone. The last one I had is again around 35,240. So that keeps me from FOMOing, and then I just say, let me wait for this hourly candle to close, and then I'll just trade it as is. So right now I don't see anything here for US 30. Gold, nothing really. And EU, nothing really. But already by using our analysis, I already know that to wait for a buy on EU around 1.0900. So I'm sorry, 1.09,000. So we are 40 pips away from that zone. So that's a zone I would put an alert at. For gold, I know we have on the 4-hour time frame, we have those double SARs around 1919. So I know after 2 4-hour time frames, and that's gonna be what? That's gonna be at 5 p.m. So maybe sometime during late Asia, I need to look at where gold is. If gold has 2 4-hour closes below 1920, I will sell gold. So here. So if in the next 8 hours, because it would need this 4-hour candle to close below and the next 4-hour candle to close below. But that just tells me that I need to wait for to watch what gold is doing at around 5 p.m. So if we do get 2 4-hour candles closing below 1920, I will be selling gold on the 4-hour time frame. So as much as we don't have anything to look out for here, so the next trade I would be looking to take right here is US 30, but that's going to take another 51 minutes. in order to see where this hourly candle is going to close at. So yeah, so right now, pretty much if you guys have any questions, we can go over them. But right now I don't see any entry for anything. And the best thing with the 1:2, and actually I just realized that this profit that we took on Monday, this should have been, I know I recorded it as a 1.5 because I said I'm going in with, so the first trade we did with a 0.5% risk. So that was a 1:1. The second trade I said I went in heavy with a 1% risk. So actually this trade gave me 2% and not 1% because I was risking 1%. And since I had a 1:2, it gave me 2%. But anyway, I'm not gonna, I know I recorded this as 1.5, so I'm not gonna change that, but that's just something I realized actually today, because keep in mind, I'm also trying to improve my my risk to rewards. So that's the best thing with a 1:2, right? Like a 1:2, 1:3, like if you're risking 1% and you set break even at 1:1 and your trade hits TP, you actually make 2%. So that's why I want to be critical about having like a 1:2 target for these setups. Because if you have like nice entries and you have that nice tight stop loss that by back testing it's rarely going to be hit, that's going to give you a nice return overall, and you're not going to be worried if a trade hits stop loss, because if your trade hits stop loss using a 1:2, if your next trade goes to like a 1:2, you'll get back the money you lost and you'll have an extra win on top. Yeah, and you can see EU, right? So if we turn here to the 4-hour time frame, where was that? 1.09 thousand. So it's this zone right here, right? So, and unfortunately, we have that trading view limitation where you can only extend these lines by 500. So I know there's some other lines up here that are not getting to where price is at, but at least this one. So I normally just look at the line that's closest to everything that I can see, if I'm looking for those double lines or even single lines. But if you scroll to the left, you'll see there's a bunch more lines around there. Yeah, but you can see here, right? This zone is where I would be looking. And you can see, so for example, here, look at how tight of a stop loss you can have here. So here, if you're trading, as much as you want, you can literally have a stop loss like this. So this is like a 10 pip stop or something, right? 11 pip. But for me, I want to do at least a 30 pip stop. So for me, like this would be the setup I would be looking to take. Or even 900 here, like 90 pips. But you can see that's the entry I would be looking to take. So let's see here on EU, what's around 9,000. So 9,000, we don't have any support based off of trend lines. The support we have here for EU is 1.08780, which would be about 20 pips away from 900. So you can see the importance here of just knowing how far down this can come. Yeah. Any questions from anyone? So this is the trade I'm looking for here, and this is on the 4-hour time frame. So keep in mind, so in this instance, this is not a break and retest. Since this is a buy from the bottom, we would wait for rejection. So you'd want a 4-hour candle to reject from this zone. So we don't want a 4-hour candle. So if a 4-hour candle closes below this region, then that would be a break and retest. We would be waiting for a break and retest. But if you're looking for a retest and rejection means you don't have any candle closing below this zone. So what you'd be looking for here is a 4-hour candle to reject. So come here, test this zone, close up, and then the next 4-hour candle to do the same thing, test the zone and close up. And then at that point, that's when you'd enter the trade, whatever the entry is, to write that trade back up. So that's the rejection, retest and rejection. As a break and retest is if the entry is above you for a buy. Retest and rejection is if the entry is below you for a buy, and vice versa. If you're looking for sales. So for US 30, this is what I don't want to happen, because if this happens, look at how far my entry is going to get pushed. But right, we have 45 more minutes before this hourly candle closes. But if US 30 stays below here, like look at how far, because right here, right, I'm starting to do the math about how big of a stop loss I need for this entry. So you can see right there, that's a 200 pip stop loss. So yeah, I'm right. It's not a trade I'm willing to take. So until US 30 comes back up here, that's the only time I will be looking to trade. But you can see on the daily, this trade is still going. So I'm not in this trade, right? I'm not right. I don't want to hold a trade for 1,000 pips. But I think like Audrey, who's in here, held um is in this trade. So does anybody have any questions about SAR? So right, you can ask about reversals, breakouts. I'm not trading reversals, breakouts, or crosses. Not that I'm done with them, but until I can trade the SAR strategy by itself without even thinking, without even having to question myself, I am not trading any other strategies. Not that, right? So keep in mind that they do work. So you can see here, this sell, of course, with the crosses indicator went into profit. This buy would have went into profit. This buy would have went into loss right here for the crosses indicator. For the breakout scanner, right, you had this sell. So until I get the SAR strategy down, I am not trading anything else, because if you don't understand the SAR strategy and you haven't understood all the other strategies, you might as well just find something else, because you're just going to be confusing yourself, and I do not want to contribute to people confusing themselves. So for me, right, feel free to ask, you can let me know, oh, we have an entry on the crosses strategy, right? I will go there and I will analyze it for you. But as of now, right, I will be, for the next week or so, I'll be sticking to the SAR entries, and then just focusing on them. And then once I have that, then I'll start using all these other right indicators. So for example, one indicator you can start easing in, like after you've understood the SAR entry. So for example, if I'm looking for a buy here on EU, right, I would want to see some buyers around 1.09 thousand, right? So one indicator you can, after you've understood the SAR strategy, one indicator you can start easing in and seeing how they work together is the zones indicator. Because if you're looking to buy here, when you turn on the zones indicator right here, you want to see buyers, and you can see we have a bunch of buyers on EU. So once you've eased that in, work those two together until you understand how those two work and affect each other. If you understand both of those, bring in maybe the markups indicator, right? So if you're buying, so for example, here, if we are buying EU, or if I want to buy EU at that 1.09 thousand region, and I've understood the SAR without even thinking twice, I've understood the zones, I would want to possibly see an order block at 1.09 thousand, right? So if we come here for EU, let's see what we have around 1.09 thousand. We have an hourly bullish high, bullish low, right? And that's how you can start easing in to this indicators. But until you've understood the SAR by itself, do not tie it to any of our other strategies. And right, that's so I did edit it a little bit. So parabolic, right, suitable for scalping. So if you're a scalper, right, it's the same, whether it's the 4 hour, whether it's the 1 hour, the entries, the confirmations do not change. But suitable for scalping and early entries at lower time frames, best if used on the 15-minute time frame and above. Again, I tried with it, I tried scalping with it. It was working, but it was making me overtrade, and I do not want to be doing that, right? I was just overtrading, and I ideally changed. I mess up when I overtrade, I over leverage, I FOMO. So I just said I'll just tie it to my swinging. And this is why I back tested all of this, right, for the 4 hour. That's where I got the SARs, because right here on the 4 hour, if I look at so let's assume, right, EU right here. So what I would be looking for is what happened at a double rejection for, so for example, EU. So this one right here, like the entry, no, that was green and black. I'm sorry, that was green and red. So I'd be looking at zones where we've had double SAR. So for EU, this is on the 4-hour, my bad. If I go on the hourly, you can see for EU right here, every time we had, and this is the entry I took and I made like 2%. Right? We had that rejection on the hourly, break and retest using a double SAR, close below, price went up, right? Same thing here. We had this entry. This one would have hit stop loss, but this one you would have been chasing because the original double SAR for a sell was there. But anyway, this again would have hit if you're trading this and you put your stop loss above the SAR, and this one would have given you a 20 pip TP. So if you want, I'm sorry, 20 pip stop loss. If you wanted 1:2, this one would have ended up with stop loss. But again, you come back to the double SAR that I had taken. You wait for this one again. So this is not a break and retest. Since this sell is on top, this is a retest and rejection. So this candle retested and closed below the next candle. Yes, it did not get all the way up there, but it closed below. You enter into that sell, stop loss above that SAR you're trading. So you can see with this trade, you have a 13 pip stop. But again, I recommend you guys to have like at least a 30 pip stop loss on everything. You can see again, that would have given you a nice full TP. If you want to re-enter or scale in, you had another retest here, right, on the double SAR for a sell, and then rejection. So again, not every time will you get a retest. So this one is rejection. Actually, it's a retest and rejection, or rejection and retest. So not every time will you get the second candle. So keep in mind, all our entries are on the second candle. So not every time will you get the retest on the second candle. So all you just need is, if it's a sell, you need the second candle to close below. If it's a buy, you need the second candle to close above. So not every time will you get a perfect retest on that second candle, which is giving you an entry. So here on EU again, on the hourly, you have that rejection from that double SAR region. The second candle did not retest that SAR region, but it closed below. So again, an entry there, stop loss above those SARs you're trading. So that gives you like a 36 pip. So call it a 40 pip stop loss. A 1:2 would give you a 80 pip TP. And that's again another trade you could have, you could have been taking. So it's all about back testing. And then once I understand how all of this tie together, then I can be able to tell you guys the best combo to use. Is it SAR and breakout scanner? Is it SAR and crosses indicator? I mean, I don't know. So, but until you understand the SAR by itself, just stick to it until you get it. So always have a bias. That's why, again, my bias comes from the trend lines. So all these trend lines I draw on the hourly time frame, because what I want, like for example, that sell I took on gold again was rejecting from this upper trend line. So that's where I got my bias from. So I just didn't sell just for the sake. I knew gold was rejecting off of a static trend line and gold was trending down. Another way you can find bias, go to the 4-hour time frame. So for example, here I just told you that on the 4-hour time frame, we have a double SAR at around 1.09 thousand. So use this double SARs or triple SARs as your bias. So say I am not looking to buy EU until it gets to that. That's how you have a bias right there. So you just wait for 1.09 thousand and then have your bias for a buy, and then you go ahead from there. So always have a bias. Identify double SAR zones on the 4-hour and hourly. These offer optimal entries for swing trades. So again, since for me I'm not scalping with the SAR strategy, I am swing trading it. So I use number 3. So I identify those double SAR. So for me right now, I know to wait for EU at around 1.09 thousand, and then I'll look for entries on EU. Watch for horizontal parabolic lines to form in the direction of your bias. So you can have an entry. So for example, here on the 4-hour, if I have a lot of confirmation, so if price gets here, on the 4-hour time frame, and then price is so volatile, and I have like an 80% probability on the next, so on the retest candle, right? Instead of waiting for the full 4 hours, I can come here on EU and look for a buy. So I can look for a green SAR on the 15-minute, and I know we've traded this on the live session last week. So if you have a high confirmation or high probability that price is going to go in that direction, and you're trading the 4-hour and you don't want to wait for the whole 4 hours to close, you can come on the 15-minute, but use the same strategy. Look for that entry, wait for that. If you're looking for a buy, wait for a green SAR region to form and wait for a break, retest, and closure above, and then you enter the trade that way. But keep in mind, it's always best to wait for those two candles to close either above or below for the direction you're trading. Verify the trend by applying the bar color filter. Make sure that the trend matches your bias. So if you're trading up, if you're looking to buy, make sure that the candle you're buying is green if you've applied the bar color filter. So keep in mind, if you apply the bar color filter, the red candles will signify candles below the 9 EMA. The green candles will signify candles above the 9 EMA. And that's why I took off my EMAs, because right now, just by looking at the candles, I can tell if price is above or below the 9 EMA. Now, here's the caveat to that, right? And I went over it last week. If you're trading so for example, here, I would be looking to buy EU at 1.09 thousand. Since these are 4-hour candles, if EU keeps trending down, that 4-hour candle that I would be looking to buy, or even, that 4-hour candle that I would be looking to buy, most likely will be below the 9 EMA. So which means it will be a red candle, but I don't have time to wait until the 4-hour candle turns green, because that means that price will actually be going in my direction and it will be a little too late. So that's why then I would come to a lower time frame. So even for me, when I'm trading the hourly time frame, unless it's on impulse, like today, this gold sell that I took was on impulse because it had satisfied this trade, I would move. If price was moving like slower, if it wasn't during like New York Open or whatnot, I would come to the 15-minute time frame and then look for an entry there. So for example, here, so this wouldn't be a good example because price was selling, and of course, if we go here, the candles were red. But let's assume that price, I was looking to buy gold here. Okay, let me show you. So let's assume I'm looking to buy gold right here. So you can see these candles are red, which is telling me on the hourly time frame, price is bearish or price is below the 9 EMA. But let's say I had an entry for a buy right now and it was valid. So of course, if I'm buying gold right here, the candle color wouldn't be matching my buy because the candle would be red and I'm looking to buy. But if we go on the 15-minute time frame, you can see we are having a green candle. So of course, I would enter on this candle because it's matching my bias. So that's how, if you're trading the higher time frame, your entry might not match the candle color because those high time frames, the candles might take a while before they change the color. So 6, wait for the break, retest, and closure above or below the parabolic line, depending on the direction you're trading. Set stop loss below or above the line. A better stop loss is below the previous high low, but right, if in doubt, always have like a 30 pip stop, whether it's gold, US 30, Bitcoin or whatnot. Even if it's scalping, right, at least have a 30 pip stop, unless you want to be amazing and you have like a 10 pip stop, which is possible, but you're more likely to get faked out. And then number 8, note that parabolic lines can act as reversal points. So actually SAR, so the parabolic SAR, the SAR means stop and reversal. So keep in mind that you need, and that's why it's important to wait for those confirmations because, right, it can stand for stop and reversal. So a good example is here. Let's try and look for something.
Can I ask a quick question, please?
Mm-hmm.
So I was watching some videos on YouTube to understand better this parabolic strategy and how it works. And most of the videos I saw when they were showing like how the indicator it looks it appears with points. And
The
what?
dots,
Sorry?
the little dots on the screen, right?
Yeah, yeah, yeah.
Yeah.
So I was wondering how does it what the logic behind the lines? Is this just the look that is different and the logic is the same,
Yeah, the
or
look is different and the logic is the same, because if you look at the points, let me see, we'll probably get a nice screenshot. So if I go to images here, no, I put parabolics. Okay, so this is like what you're talking about. So right, with parabolic SAR, if price is in an uptrend, quote unquote, the dots will look will be supporting price, in short, right? Will be below price. If price is in a downtrend, the dots will be above price. So let's assume, so think of it this way. What if with this first dot, you could have, okay, well, even if you're using that indicator, this first dot can ideally tell you price is possibly getting in an uptrend. So think of it that way. So think of these horizontal lines as the same thing. So think of it as think of this horizontal line as being this first dot. So think of a green horizontal line being the first dot. Think of a red horizontal line as being the first dot in a downtrend, right? So
okay.
it just makes the chart, yeah, so it just makes the chart cleaner. So, and for me, ideally how I like interpreting them is, once we get this line, it's telling me look for a buy at this time, at this price, and that's it.
Okay. So
Yeah.
it's like your coder didn't put all the
Yeah, all these dots. Yeah.
okay, so he just put the one that can be used for reversal or to catch like yeah, so the one that can be used for reversal.
Yep. Yeah, ideally, quote unquote, the most, I'm not gonna say perfect, the most optimal. Yep.
Okay, okay, okay.
Yeah, and this ones, they come in real time, and if the logic is not satisfied, it disappears. But this one, right? So these are areas. This would be, if I had a pending orders EA, this would be a nice pending order area. So the other part I like thinking about it. So remember when I mentioned to you guys that sometimes how market makers play, like, so let's assume that US 30 is supposed to go up. And let me turn off this other indicator. So let's assume US 30 is supposed to go up, and market makers know that. But what sometimes market makers do, they leave pending orders along the way, such that if an instrument, so let's say in this case, US 30 does decide to come back up, guess what happens when price reaches here? You have a spike in liquidity, right? Then you have that retest, goes to the next area. So in this instance, it would be, so for example, this one right here. So let's just look at these three. So 1, 2, 3, right? So if price comes here and breaks and closes above, you have a spike. You have a short-term retest. Price gets to the next, so in this case, I'm pointing to this parabolic buy. Guess what? Spike up to the next one and then spike up. So also think of them as areas where you could set pending orders. The issue with pending orders is that you're not going to get that break and retest, right?
Okay.
So you're going to be filled in at that particular price. So that's why even while trading all of this, even as much as even for me, I'm saying in the 4-hour, I'm going to drop to the 15-minute, it's going to be a risk, because the best entry for that EU one will be waiting for 2 4-hour candles. So meaning a whole 8 hours to reject right there. So, right, it's always best to wait for that 2 candle closure above or below. But yeah, but that's the logic. Instead of having all of those dots, it just summarizes that and gives you the areas of interest for parabolics.
Okay. So like for you, I'm feeling the same, like it's too stressful when I'm scalping. So swing trading, that's what suits for me.
Yep.
And I was wondering, so all the trades that you took, you waited for the break, the retest, and the close below or above in
Yes,
the one
correct.
hour.
Yep.
Okay, okay, okay. Okay, thanks.
Yeah. And the other thing to look out for, so if you're trading and you see all this red, right? Even on the hourly, you see the same thing we saw on the 15-minute when we spread them out. It might be a little, right, a little challenging and you're not sure what you're looking for here. So if you get all these lines close together here and you see one major candle, ask yourself, what did this candle just break? So for example, here, if I was looking at it, so let's try and replay this and analyze what happened here, because here gold was consolidating. So that, right, forget about everything else. So let's just analyze what we are seeing right here. So we know we have three. So when this candle was forming, it formed the third SAR. So this is telling us if gold closes with 2-hour candles here, we're going to get a nice buy on gold. Okay, that's fine. So we let price do its thing, right? Okay, so this did not close above that. So price is still, right? Price is still in that zone. So for me, when I would have seen this candle, I would have asked myself, this is a big candle. What did this candle just do? So this candle is a bearish candle. Okay, if it's a bearish candle, I do see 1, 2, 3 SAR regions, and this candle is forming a fourth. I don't know if this red line is also an SAR. I think it was also forming an SAR, if I'm not wrong. So this candle is breaking 1, 2, 3. So that is to tell me, hey, if a red candle is breaking 3 SAR sell regions, that's, that might be a nice indication for a sell. But anyway, I need to wait for a retest candle. So this is telling us, hey, this thing is breaking 3 SAR regions. So you wait for the next, yes, and I was correct. It did form an SAR, the fourth SAR. So when it broke 1, 2, 3 and created the fourth one, what I would be interested here, right? What was my bias on gold? My bias on gold was a sell. So here I would be telling myself, my bias on gold is a sell here until we get a closure, 2 candle closures above this SAR, single SAR, or above these three SARs. Then and only then would my bias change to a buy. So as much as your bias can be one way or another. So for example, if your bias is a sell, ask yourself, at what point can I change my bias? What can satisfy me changing my bias from a buy to a sell? What can satisfy me from changing my bias from a sell to a buy? So in my case, today for gold, the only way my bias was going to change from a sell to a buy is if we had gotten a rejection, or if price got to this trend line right here, this double trend lines. Right? So that was one instance. What was the other instance? The other instance, we had three SAR buy zones right here. So if we got 2 candle closures above here, my bias for gold would have changed into a buy. So always ask yourself, if your bias is a sell, at what point can your bias change to a buy? And the reverse. Okay, so here I know that an hourly candle literally closed below 1, 2, 3 sell SAR regions, and it created a fourth one when it closed. Okay, so since I know that's my break, what am I looking for next? I'm looking for a retest and closure below, or in short, let's just call it a closure below for the second candle. Because not every second candle will give you that retest. So at this point, I was observing this. I want to see, what is this candle gonna do? Is it gonna close back above? So keep in mind, if it closed back above, my bias, right, my sell entry is gone. I would have to wait for 2 more candles to break and close below. So as we replay the candle, you can see what happened. This candle went all the way up and closed below these 2 SARs. Now, at that point, I asked myself, what SAR am I trading? Right? What SAR am I trading right there? If I was trading this SAR, this one right here, this would be a break. And I would say maybe it's not near retest, but ideally you have 2 candle closures. So maybe that's one entry I would have taken right there. I know that's a buy. That's one entry I possibly could have taken here. But why am I taking this entry? I'm taking it because it's a break and retest of one SAR region right here, if that makes sense, right? Now, for this one, if I want a 30 pip stop and a 60 pip TP, and we keep playing, So for this one, I would have gotten taken out at break even, because you see price came like to 1:1 and then went all the way back up to break even before dropping down. So for me, if I was taking this trade, and that's not the trade that I took, but if I was taking this trade, because this trade happened at 1 a.m. in the morning or 2 a.m. So this, if I was trading at that point, I would have gotten taken out at break even, because at 1:1, I would have set break even. Now, this is the trade that I took now this morning. So for this morning, what did I do? So the same thing. So this trade, you can see all of these candles before then were rejecting off of the entry that I could have taken. So you had this one candle. So let's just recap on that, just that one that I took. So for here, same three zones. So one sell zone. So my bias was still a sell. Again, right here, I can ask myself, when can my bias change for example, for a buy? And this was at 4 a.m. or around 3 a.m. So for me to change my bias for a buy, 2 hourly candles would need to close around 1934. For a sell, I would need an hourly candle to close below these SARs to retest and close below, or continue. So here, you get this candle right here. So this candle, what is this candle doing? So you had first this red candle closing above the first SAR at 1933. You had the next hourly candle, and this is, again, this is at 4 a.m., 3 a.m., and I was asleep. I wasn't trading that. You have this next candle retesting, and it's dropping below. Okay, so here, this one would have been an entry. If I was trading it, yes, this is a valid entry. I would have taken, I would have possibly taken that trade, and thank God I didn't, because I got stopped. So remember, right? No strategy is 100%. So this one, of course, you could have gotten taken out. So that's 35 pip stop loss. You'd need like a 70 pip TP, but you can see that one would have gotten taken out. And you can see, if we keep replaying that, that was a stop hunt for gold. So if we keep going, so the one that I actually traded, so same zones, you had this red candle. So keep in mind the logic behind this red candle. It closed below 1, 2, 3 SAR regions and formed its fourth one. Okay, what did the next candle do? So, requirement number one has been satisfied. Same thing this candle did. It satisfied the break, and it broke. So it broke 1, 2, 3, and 4. So it closed below. So I'm waiting for my retest candle. So retest or closure below. So that's what this candle gave me. This candle retested this SAR right here, and this SAR right here, and then closed all the way back down. So that's when I took that sell on gold. And you can see it went all the way to like 70% in profit. I was already at break even at 1:1, came back up, hit break even, and then again, gold is pumping up to the upside. So just ask yourself, right? For you to avoid all of this back and forth, right? Have a bias, use trend lines, or use any other indicators you guys use out there for bias, or just use the 4-hour time frames and identify 4-hour and 1-hour. Identify those double zones. Those are going to give you areas where you can wait for price. Or if you're trading on the 1-hour, right, so for example, right here on gold, same thing again. Gold is testing 2 SAR regions on this hourly. So if I'm looking to sell gold right here, what strategy can I test with? So this wouldn't be a break and retest, because this is a sell. This would be a retest or rejection and retest. So if this hourly candle closes, so you see how it just did, it rejected off of this top SAR at around 1931 also, so rejected off of this. So let's assume in the next 16 minutes, gold closes below these 2 SARs. So if my bias is still for a sell, so right now, if you ask me, if we get to this trend line, possibly, right? Because if we expect gold to keep going down, it should respect this static trend line to the upside and then come back down. So I do see possibility for sell continuations for gold. So knowing that, right here, I would be looking for a rejection and retest. So I would need this hourly candle to close below 1930. I would need the next hourly candle to reject off of the same zones and close below. And at that point, I would be looking to sell gold based off of our rejection and retest. So that's just how, for me, I analyze them. It's better. These double zones are better than single zones, but just back test and just find what works for you, because what might work for me, right, might not work for your trading style. So let me know if you guys have any questions, but definitely, right, first understand this by itself. If you don't understand it, and if you don't keep understanding it as we go on with the live sessions, just forget about it and go back to the others, right? The others have like the signals, have the breakout scanner, gives you buy and sell signals. The crosses indicator gives you buy and sell signals. So if this is your preference, well and good, but you definitely need to put a lot of time understanding this SAR. You definitely have to backtest it on the daily, backtest on the 4-hour, on the hourly, and that's the only way you'll get it. Because all of these lines can be confusing. Like even for me, honestly, right, even last week, I took a couple of L's, and even on the live session, we took a loss on gold, because it's just you just have to backtest a lot and understand how this price is acting. And the only way to understand how price acts from double zones or single zones is just to backtest. Right, so if we backtested here on gold, you can see this buy. I can automatically see a buy right here. So this double zones, what happened when gold closed above here? We had this push to the upside. So this would have possibly been a buy on gold, but this would have been 43. Your stop loss would have been 50 pips. Are you willing to do a 50 pip stop on gold? I don't know, right? So you just backtest and look at how are these instruments performing in the past at these zones. So that's the only way you'll be able, and you can see this rejection. The other thing, again, for you scalpers, these double zones are nice zones for scalping. And by that I mean, and this is what I was doing last week, and I was just over leveraging, to be honest, because I think it's just gambling. So I was waiting for price to come to these double zones, and I enter like a heavy sell. So like if this was US 30, I was taking like, if this was US 30, I would take like a 100 lot sell here. So it is, it can make you gamble or FOMO, but because the idea behind it is that when price gets to these zones, you definitely expect heavy rejection in that direction. So the only caveat to that is, for example, if you're doing the same here for gold, for gold here, and you're looking to buy, unless you're looking only to make 10 pips, you can see, yes, we did have that rejection, but gold kept melting back down. So just keep in mind that SAR stands for stop and reverse. So if the reversal is in your direction, yes, as a scalper, you can make a lot of money. But if the reversal is not in your direction, you can get burnt. All right, last questions before we call it a day.
Thank you very much.
All right, perfect. All right, I will talk to you guys tomorrow. Trade safe. All right, bye.